The cost of consumer goods and services in the U.S. jumped faster than expected last month. The Labor Department says the Consumer Price Index increased 0.4% in September. Shelter and gasoline contributed to the spike. Food prices also continue to rise. So joining us now for more on this is Robb. He's a senior economic reporter for MarketWatch. So what does what I just said even mean?
I think the inflation genie, is still out of the bottle. Inflation is still around. It's coming down a little bit. The market didn't seem to mind today's numbers. We're not talking here about, like anything dramatic happening in the market. Inflation is kind of stuck around 7%. That's a lot better than it was, like 9% a year or so ago. And at the core measure, which is people watch closely, which excludes food and energy, it's coming down a little bit. So overall, today's number didn't spook the market, doesn't spook anyone. It doesn't, but it's nothing to celebrate for anybody at home because inflation is still around.
So this morning, as you know, unemployment claims showed they were unchanged from the previous week at 209,000. So what's driving a strong labor market?
Yeah, the labor market is the strongest we've had in 20 or so years. People are working, companies are hiring people because people are taking the money that they earn and they're spending it. We're in this sort of virtual cycle. Companies aren't laying off workers. And so the labor market is really doing well. It's a, sort of not known by everybody, or people don't sort of recognize it, how good it is, but it is really good.
So the oil markets, though, have been rocky lately. As I understand it, the conflict in the Middle East shouldn't be playing a role because we're not talking about oil producers. But are there other concerns?
Well, I think the conflict in the Mideast is pretty much front and center. We're not sure that things are going to calm down from here now. Everything looks a little bit dicey. So I think the market's on edge. Everyone is on edge, right? So people are watching that. Earlier this year, the Saudis cut production. They wanted prices to go up. It didn't seem to work that much. Prices haven't gone up because the Chinese economy is kind of stuck in the doldrums here. But people are totally on edge because of the Mideast over the past week, and we're taking it minute by minute here.
Some major banks report earnings tomorrow, including J.P. Morgan and Wells Fargo. Has the fear about the financial sector subsided compared to earlier in the year when banks like Silicon Valley Bank collapsed?
Yeah, that was pretty much panic mode there in March because people thought that there would be a sort of like a cascading problems at banks. The Fed stepped in really quickly with this forcible program. Banks can go to the Fed now and get money if depositors get nervous, but banks are kind of in a weak shape here. So their earnings reports are coming out this week. Only J.P. Morgan seems to be doing pretty well, but overall, banks are better than they were in March. It is the scare that we were worried about in March has subsided, but banks are in a pretty bad shape here. They made a lot of loans when interest rates were zero or around zero. Now interest rates are a lot higher, so those earlier loans aren't worth as much. So they're going to show the market their books, and their books aren't so pretty. So we're going to take a look at that this week and. We'll know more at the end of the week about how things are, but it's not great over there in the banks.
All right, Robb, love the art behind you. Thanks very much for joining us.
And I appreciate the time, and anytime I can help, let me know.